It's Monday, August 26th. You've got Goose, and you're entering into the core, brought to you by Zelcore Plus, the one cryptocurrency wallet for all your custody and trading needs. To learn more about Zelcore Plus, check out Zel.network. So, continuing right along with our regular Monday interviews, I am happy to announce that we have Chris Dannen, partner and co-founder of Iterative Capital. Chris, how are you doing?
Doing well. Thank you, James. Great to be here.
Well, welcome to the core, and it's so good to have you on. And just so people know, Iterative Capital is a project that has been providing investment management, cryptocurrency mining, and wholesale services since 2016. It's such a broad swath of different services. So maybe you could tell us a little bit about how you guys got started and what it is that you do.
Sure. So encompassed in the Iterative Capital family of companies are two main businesses. One is essentially a hedge fund, although I don't like that term. It's an LPGP, a series of investment vehicles, all focused on proof of work mining. So we are very close to the bare metal. We think a lot about proof of work and not at all about things like proof of stake or ICOs. And that's the original business. That's the business that we started first in 2016. In 2018, we decided to build out our own over-the-counter wholesale dealer in New Jersey because we saw that there was kind of a need for that, at least a need on the customer service side and on the pricing side too. So we've been operating that business since February of 2018. Last month, we did about $500 million in notional trading volume. This is all BTC, USD trades. For the most part. So that's kind of the vertical that we've built. We generate coins and we provide liquidity to the ones that we like.
Excellent. So in the mining operation, just for people who are not familiar with the company, there are several cryptocurrencies that you guys support, especially in your over-the-counter trade option. So does that mean that you're mining all of those currencies?
Not all of them, but generally we do mine much of what we trade. So I would say that our biggest mining commitments at present, in addition to Bitcoin, are Decred, Zelcash. I think we have some Litecoin machines online, and maybe a handful of others. So the Zelcash we mine with our GPU mine. We have a few thousand GPUs here in New York State. And everything else, for the most part, is in China. So we do our ASIC mining in southern China, in Sichuan province. And those machines come from a variety of manufacturers. There's a minority of Bitmain machines, quite a few Shenma machines, some InnoSilicon machines. So the mining business is kind of bifurcated. We handle the GPUs here because, well, for a variety of reasons. There's just not as many competent ASIC hosts in the United States. So we prefer to kind of split things.
That's great. So as far as Zelcash goes, that's predominant. It sounds like that's the one that you're predominantly mining here in the States with the GPUs. How has the new Zelcash algorithm been working out for you?
No trouble. It was a fairly minor upgrade. I didn't do it myself. One of our technicians did it, but generally speaking, the Zelcash software works really well. We've had a good experience with it.
Well, that's good to hear. And I know one of the things that we focused on specifically with that algorithm was efficiency. So hopefully that's improved across the board for everybody in terms of power draw, because I know electricity is not cheap in the States.
Oh, it's cheaper than China. It's probably the cheapest anywhere, at least in any stable economy. You can definitely get some cheap rates by going to Central Asia or certain parts of Russia. But then you're paying the mafia tax too. So the U.S. is actually the best place to mine, at least right now. That could change if the exchange rate between the U.S. dollar and the renminbi continues to drop. China is actually becoming more competitive as our money appreciates against theirs. But forestalling any major move down by the Chinese yuan, I think the U.S. will be the place to be for quite some time. We have a lot of natural gas here.
That's for sure. Yeah. And that is definitely a major asset for people living in the United States. It's good to know that here we have a little bit of an advantage when it comes to, at least with GPU mining. And that's really at the core for Zelcash. what we want to see happening with our blockchain is because anybody can buy a GPU, anybody can, start to build a mining rig, or if they want to get into a little bit more of the mining farm situation, they can do that. Is it possible to purchase hash power from IC?
No, hash power contracts are generally considered to be securities, so we don't mess with those.
Okay.
Um, it's what folks like NiceHash are doing, and now Bitmain has their own service. The name eludes me right now, but yeah, those businesses are in my opinion kind of scammy. So we don't do anything that really faces the retail public. Um, our clients for the OTC desk are wholesale buyers. Our minimums are about 100K USD. So we're mostly dealing with other institutions.
Okay. And if those institutions are using your services, tell me some of the benefits that you can provide them from the wholesale level.
Well, I think that the wholesale environment is really competitive. I mean, it's a little bit like a poker game. So when you approach a trading desk to make a large purchase, they generally have more information about the market than you do. At the very least, they have information about what the rest of their clients are doing. So, let's say that they know that they have a client or a group of clients that plan to sell a lot of Bitcoin today, and you show up and you want to buy. They're obviously under no obligation to tell you that, they think the price might drop after you buy. And taking this to kind of its logical conclusion, a lot of desks use this information asymmetry to maximum advantage and will trade against you even when you are buying and selling with them. They are trading against you elsewhere on an exchange or with another desk. So I think that we attract a lot of other proof of work miners who are sophisticated in a technical way, but are not as sophisticated when it comes to markets and don't want to have to learn to worry about those kind of tricks, which many of the desks are kind of famous for doing that to big sellers. So, and if you're a miner, people kind of see you coming from a mile away. They know that you have all this liquidity that you're trying to get out of eventually to recoup your costs. And so they're not always so nice when it comes to pricing you if they know when you're selling and how much you're selling. So we tend to provide a kind of a more fair, more equitable service to miners. We're not preferential with our quotes, and we're the only desk that I'm aware of that is automating to the extent that we're automating, just to make it easier for people to conduct their regular trading activity without needing to talk to a human being or do it themselves manually.
Well, that's really the name of the game, making this as convenient and simple as possible. I was noticing also that you're fully licensed, right? So especially as a company based in the United States, you have certain regulations you have to follow.
Mm-hmm. That's true. Yeah, although the licensing is actually overkill. To be a private wholesaler, you don't need any special licensing. We have gotten the money services, money transmissions licensing so that we can kind of work our way towards more retail-facing trading businesses. But yeah, we're hyper compliant, all things considered.
Well, that's good to know. I mean, 'cause especially you're dealing with several types of fiat currency as well, right?
So we support. I mean, it's tough to say. I mean, in theory, we'd support almost any currency from a country that doesn't have capital controls. But in practice, the U.S. dollar is so popular that even our offshore customers tend to have U.S. dollar bank accounts. So that said, we can do euro transactions and most other currencies. It just there's an FX exchange rate, so most people just cut that out entirely and open a U.S. bank account if they think they're going to be trading a lot.
Okay. And this is all done securely and privately, right?
Absolutely. I mean, the security is fortunately, as long as we're careful about handling our keys and our wallets, which we are, we've never had a loss, knock on wood, then it's really up to the customer to handle their funds correctly. And as long as they know what they're doing with their wallet and their keys, everything always goes smoothly.
Great. And one other thing that I noticed on your website, this mention of clean coins by the way that you work directly with the mining farms. So you're responsible for those coins, and so you have full custody of them.
Well, no, I wouldn't say we don't custody for clients. That would require additional registration. So we are a counterparty to every trade, meaning when someone sells to us, we turn right back around and we sell it into the market to another desk or on an exchange. And when someone buys from us, we don't have inventory that we're holding. What we mine, we hold long in the fund, but that's not really considered available for the OTC desk, except under, very unusual circumstances. So in the instance that you come and you buy Bitcoin from us, we are going to one of our liquidity providers, who is generally speaking a miner, or another desk, maybe in another country that's a natural seller. So in that regard, we're never custodying anybody's Bitcoin or money as soon as the transaction happens. As soon as you pay us, we give you your Bitcoin or vice versa. And that's how it goes.
Got it. So you basically keep a certain reserve for the company so that you can make those transactions happen in a timely fashion?
Well, we keep a lot of cash on hand, but we're never holding Bitcoin overnight for the desk.
Okay. Well, it's good to know. I was also poking around on your website and I came across this really interesting, and by the way, if anybody else wants to take a look at the website, it's iterative.capital. And on the About page, they've got this, I should say there's a link at the top for a thesis here that actually provides a timeline to Bitcoin, which I found really fascinating because it's this huge history of everything from Taylorism all the way up to when Bitcoin launches, and Morgan Stanley and Goldman Sachs in 2018. So what was sort of the impetus for providing that timeline?
I think the impetus is just encountering the same misunderstandings again and again and again during the course of fundraising for our first and second and third funds. I found myself kind of explaining recent history again and again, and the reason that that's a difficult thing to do verbally or on the fly is that you don't always know somebody's background. So if somebody comes from financial services, they need a different set of explanations than someone that comes from technology or someone that comes from neither of those fields. And what I found is that no single group of, I mean, if we're going to be so crude as to stereotype people into these buckets, no single group of folks really sees the Bitcoin phenomenon completely. The only people that, in my opinion, that really get it are people that have one foot in the tech world and one foot in finance. It's impossible to understand how this stuff can grow if you don't understand how markets work and how liquidity flows in the traditional system, right? It would be very hard to break those rules if you don't know those rules, or you don't know how things are generally done. By the same token, financial types look at technology in a kind of a very warped way. They're used to using proprietary stuff, usually as a service from some company, some private company that whose shares they may own. And the idea of free and open source software is, number one, by itself almost counterintuitive to folks from outside software. And then number two, the way that you would use something that's free and open source, the way that you would interact with it is much different. If you're a Linux user, you're sort of on your own to learn the command line. And fortunately for people that embark on that, right, they have Stack Overflow and tons of resources, and actually command line's not hard once you get into it. However, if you're used to speaking to a salesperson and them just snapping their fingers and making something happen, working in the command line might seem excessively onerous. So what we're trying to do is make a case, to make kind of two cases at once. We're trying to make a case to the technology people that they need to consider the financial element of this more. And I think, as we talked about before the recording, folks like Saifedean and folks like Andreas Antonopoulos and folks like Nick Szabo have done a lot of work towards getting people to understand the anthropological role of money and its origins and all that. What I saw as being missing is kind of a business school type approach, which is how does this form of organizing, this free and open source way of spinning up a network and then everybody contributing to the same instance of the same network instead of forking off, the way that people have done with Linux and other FOSS projects, had not really been talked about from like an organizational design perspective or a management perspective, let's say. So that's what we're trying to do with the thesis, is kind of bring together the technological impetus, the financial considerations, and help people understand how businesses could adapt and eventually adopt this sort of tech.
Well, one of the things that we've noticed in the news as of late is that the Fed is actually looking into developing their own form of payment system. They're nicknaming it Fed Now. And I remember over a year ago that there was some talk about the possibility of a Fed coin, as it were. So, why is it important for us to want to embrace cryptocurrency in its truest form, like you talk about the decentralized, open source? Never mind the Linux end of it, but just the fact that it's an open source software-based form of transferring value. Why is that important versus what could potentially be a dreadfully centralized system? You can tell I'm a little biased here towards crypto, but what are your thoughts?
Well, so I would say first that FedNow is really just an upgrade to FedWire, which is the existing gross settlement system that the Federal Reserve uses. So if if someone asks me like what is Bitcoin, I never use the word decentralized. I never use the word open source. I never say protocol. I say it's a gross settlement system. It does the same thing that FedWire does, that Swift does, that there are a number of others. Europe has a few. They're kind of balkanized, but settlement systems are just software platforms for banks to move value from one bank to another, hopefully without the opportunity for one bank to just create money out of thin air. The only bank that can do that is the Fed itself. All the other member banks on the Federal Reserve System obviously can't print money. They can only go to the Fed window and borrow money. When they borrow it, it is created by the Fed. So this is the way the system works today. The way that the Fed was initially conceived of was as a decentralized system. That's why there are, I think, 12 regional Fed banks. That worked well. I mean, it's arguable whether anybody ever needed a Federal Reserve System or a central bank. I'm of the opinion that no country needs that, but countries keep ending up with them, usually to finance self-defense. So fine, if we need them, let's make them decentralized. The Federal Reserve tried this in 1914. But what has really ended up happening is the New York Fed kind of wags the dog. The New York Fed is the de facto leader. The rest of them kind of seem to opine a little bit, but it seems like decision making has become pretty centralized. And with that, that's where you get the moral hazard of the Fed bankers in New York printing money for the commercial bankers who also live in New York. I mean, these people are neighbors. They golf together. So this is why you don't want the person controlling the printing press to be, one person or a centralized group. So there's nothing wrong with, I think, centralization in abstract, but for money printing, it becomes a big problem. So, I generally try to take the approach that Bitcoin is a superior gross settlement system because you can't print counterfeit cash. You can't hack into it and take someone's cash. I'm not sure when the last time FedWire was hacked, but I know Swift was hacked last fall, I think, by a group of Russians, and $80 million was stolen from one of the South Asian central banks. That's a pretty big deal. If a bunch of rogue people can hack into your settlement system and take $80 million and get away with it, your settlement system sucks. And so when you look at Fed now, what you see is a piece of garbage infrastructure which has a monopoly, which is now being forced to kind of upgrade itself. Not because it doesn't upgrade because upgrading is so difficult. It doesn't upgrade because it's a monopoly. So I like that Bitcoin and other networks are creating substitute products or competitive products to gross settlement systems. I think that's the right way to look at it.
Yeah, and I agree with that. And we had Ted Lin from Binance on last week, and we were talking about how the future is very likely going to have multiple cryptocurrencies. I mean, we're already in a situation where we have over 2,000, almost 3,000 cryptocurrencies. But there's, as more people jump on board with the whole process and realize the potential of having a blockchain and how that can secure your funds, secure your data, secure your technology, your smart contracting, all of these benefits that can come from using this method. It's just inevitable, a matter of time before people all switch over to it and accept it for what it is.
Yeah, I mean, I don't know. I go back and forth whether I think it'll be a really widespread retail phenomenon in the near future. I could easily see a scenario where people who have wealth to store and people who are kind of more financially literate end up we end up with a two-tier system essentially, where the folks that understand money, let's say, for lack of a better term, end up moving their assets to Bitcoin, or moving their liquidity to Bitcoin, because they're worried about a sovereign debt crisis. Whereas, the vast majority of people, that just doesn't surface on their radar. They're too busy, or they're worried about other stuff. And so I do fear that like 95% of humanity is stuck on a sinking monetary ship, and that the people that are getting out can't really spread the word fast enough, because it's a very sophisticated problem that we're up against, and in terms of global inflation and excess liquidity and persistently low interest rates, and the kind of social change that is going to motivate is not going to be pretty. You don't want a society that's not saving money, right? That a society that doesn't save money has very high time preference, and that's going to lead to a lot of waste, a lot of addiction, a lot of excess, a lot of poverty, a lot of revolving debt. And these are all the things that we're seeing now with millennials. Yep. I'm a millennial, and our generation is totally fucked. Our net worth is on average negative. We don't own anything except debt. We don't buy anything that appreciates. We only buy junk that depreciates. So, yeah, I mean, it paints kind of a bleak picture, but I do hope that somebody gets through to all these folks that in my generation and wakes them up.
Well, all the more reason for the educational process, right? So for all of you who are new to Bitcoin or cryptocurrency and are interested to learn more, I would highly encourage you to visit iterative.capital and take a look at their thesis and all of the information that they provide to educate yourself on what this is all about, because it is so deep. It goes, I mean, it's really like when Morpheus is sitting in front of Neo in the Matrix, and he's got the red pill in one hand and the blue pill in the other, and he says, take the red pill, and you see how deep the rabbit hole goes. But you're not going to be led astray by doing this. You're only going to learn more about the importance of a functioning monetary system versus kind of where we are, which is very dysfunctional. And it's so sad to hear that there is an entire generation of people who are struggling with debt.
Yeah, and don't even understand how bad the struggle. I mean, they won't know until they're of retirement age how screwed they are, and so that's, I think, when the real problem starts. Now, the one thing I'll say for our thesis, there's a lot of long documents in this asset class. A lot of people write white papers. This is not a white paper. We're not pushing a product. We're not pushing a service. We're not pushing any particular coin outside of Bitcoin. We obviously like Zcash. We like other things that are proof of work. To your point, I think there will probably end up being many coins, even if some are kind of derivative of Bitcoin or traded or paired with Bitcoin. If you consider Bitcoin to be digital gold, then obviously we need a lot of digital banknotes to make that system work. So, but point being is we've effusively cited our sources in that thesis. There's something like, I think there's over 100 books in the footnotes all told, and we put together a reading list with Amazon links and actual page citations. So if you don't believe something that we're saying, you can go to the book and actually go to the actual page and see it in context. We're really trying to give folks all the tools they need to understand this themselves without having to take our word for it.
Sure. It's certainly a very comprehensive view of money throughout the last 100 years or so. And then, of course, all the things that you'd ever want to know about cryptocurrency. Now, one other thing I wanted to talk about before we go is the over-the-counter trading process. For those who may be interested in this process, how do they go about that through IC?
Sure. So I'm glad you asked that, because sometimes people are a little bit timid to say that they don't really understand the process, and that it can be intimidating. So first of all, I'll say every OTC relationship starts with you sending us a bunch of personal information so that we know that you're not a money launderer. And that process is called KYC AML. I'm sure most people listening have heard about this. We're a little bit unique in that we are very careful with the personal information we collect. My sense from talking to our competitors is that they stick this stuff like in a Google Drive folder, and it just sits there waiting for someone to steal it. We keep everything on local encrypted drives. We don't put any personal data in the cloud. which a lot of crypto folks have told us they appreciate. We also don't report folks to the IRS. We don't, do what a lot of the other exchanges are forced to do because they're so big and high profile. So as I said, you could go to iterative.capital.com. Soon you'll be able to download an app and do this. But if you go to iterative.capital.com, you'll be walked through the onboarding process where you'll fill out the personal information. Once we check your ID and make sure everything kind of checks out, that your name matches your license and your license matches all the other information you've submitted, then we manually approve you to trade, and we put you into a little chat group in your chat platform of choice. So some people like WhatsApp, some people like Skype, some people like Signal, some people like Telegram, and then whenever during business hours, Eastern time, whenever you want a price, you can pop in there and talk to one of our traders. They'll respond within 3 to 4 seconds. You ask them for a price. If you like that price, you can say yes, I want to buy that, or yes, I want to sell that for that price. Once that happens, once the trade is confirmed, you get an email with all the parameters of the trade, basically just reiterating what was talked about in chat. And then if you're buying, the onus is on you to send your money to us before we send the Bitcoin. That's generally the way it works. If you're selling, it's the same thing. You send your Bitcoin to us and we wire you cash. I think we do things that way because obviously customers are kind of an unknown quantity, and we don't forward Bitcoin or cash on credit just because it's a risk management thing. But you can kind of look around the community, the Decred and Bitcoin community, the Lightning community in Bitcoin in particular. These folks all know us really well. You'll find a number of Reddit threads or Twitter comments where people say that they've had great trading experiences with us. And we're happy to provide references to anybody that's curious to talk to them.
Excellent. Well, it sounds very smooth, and I love the fact that when you're on the chat, you're speaking with another human being, which is fantastic. But what about minimums? It looks like most of the coins you have are like around $100,000 buy-in.
Yeah, although sorry to interrupt, I should say that for something like Zcash, which is a project that we kind of actively support and the like, we're happy to compromise on those minimums because you couldn't buy 100K of Zcash outright right now anywhere without moving the market like 1,000%. So generally speaking, we will work with you and do smaller buys over time if it's a less liquid coin like Zcash. So that's one caveat.
That's actually, see, and there's the human element that I think a lot of like regular cryptocurrency exchanges are missing, and kind of the beauty of a true over-the-counter trade. Now, in the past, OTC trading generally would take place in chat rooms, Discord servers, and whatnot, and may have kind of gotten a bad reputation for being kind of scammy. But the fact that you're collecting personal information, KYC, AML, all of that further legitimizes that, for every single customer having to meet those criteria, now you have much more peace of mind to start trading using this process.
Yeah, and I would say that if you see people roaming around random chat rooms, they're not real trading desks. I mean, real trading desks require tens of millions of dollars of capital because when someone buys from you, you may not necessarily, let's say you're conducting buys and sells concurrently, like a normal business day. You may not have liquidity to pay somebody or liquidity or Bitcoin liquidity to send Bitcoin. So you need a lot of extra cash on hand. So, generally speaking, these guys that are floating around the Discord groups, they're not working with tens of millions of dollars of capital. They're lone wolves trying to sell what they bought cheap. So I would draw a distinction between like real desks and people just trying to do one-off trades. We always stay away from people that kind of come out of the woodwork with some huge number of coins or some cockamamie transaction process. We've had people ask us to come to our office and do the transaction in person. Absolutely not. People that want to mail us a USB stick with a private key on it. Absolutely not. So, there's no reason to deal with anything out of the ordinary, anything that deviates from what I described. Just for people who may not know, it's there are reputable desks out there. There's at least 10 of them that are available to U.S. customers. So if you haven't heard of one of them or they don't look legit in terms of their website and their staff, they probably aren't.
Well, very good point. And I got to hand it to you. I am very impressed with the fact that you're adding that human element. You're adding that layer of legitimacy and security to all the transactions. Maintaining privacy, like you said, encrypting people's personal data off-site, not storing it in a cloud. I cannot commend you enough for doing something like that, because I myself have been affected by different hacks at different exchanges in the crypto sphere, knowingly having lost my personal information to a hacker. So that's something that I think cannot be taken for granted in this space. Well, Chris, it has been fantastic speaking with you. I thank you so much for taking the time to join us here on the Core. Just for those people who are interested in getting more involved with Iterative Capital, can you maybe tell us where the best place to go online would be?
Yeah, absolutely. So you can follow me on Twitter at Chris Dannen. My last name is spelled Dannen. You should also follow our head of research, Leo Zhang, who tweets periodically. And definitely check out iterative capital /thesis to see the whole thesis in all its glory. It's about 100 pages long. Most people can read it in 2 hours.
Okay. And of course, i2trading.com for those who want to get involved with the OTC. So once again, thanks so much for taking the time to speak with us today. And I wish you all the best in your crypto endeavors.
Yeah. Thank you, James. Likewise. And take care. Talk soon.
And for everyone else, you've been listening to The Core. If you like what you're hearing, please give us a thumbs up and be sure to subscribe on our Zell Labs YouTube channel. And for more information about Zell, do check out zell.network. And until next time, you've been in The Core, powered by Zell Core Plus.